People for years have asked me if the government was going to steal our IRA. I don't think so. What the government is going to do is increase taxes and fees and is going to subtly tax your wealth away through taxation. When the government spends money it doesn't have and imposes a debt on you and your children, it's extremely popular with the populace, and the government person gets reelected. If that same person proposed to steal from you overtly as opposed to covertly, that person might get shot. Put yourself in the congressman's position. Would you rather be a popular thief, or would you rather be a dead thief?
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for October 16th through October 23rd, 2023, while supplies last. This week we feature 3 different specials. 1-ounce silver Morgan rounds from CNT at $2.09 over spot. 1 10th-ounce gold maples at $25 over melt with a minimum order of 5. And 1 10th-ounce Platinum Britannia at $29.99 over melt with a minimum order of 5. First, the Morgan round from CNT celebrates the classic Morgan dollar and 1 full troy ounce of silver. At just $2.09 over spot, it's a great way to stack 4/9 fine 1-ounce silver. The Royal Canadian Mint is one of the most trusted mints in the world, and the 4/9 fine gold maple is their premier coin. The 1 10th-ounce maple adds a further degree of flexibility and liquidity. Rather than tubes, they come 40 to a sheet and are available at just $25 over melt while supplies last. Finally, the 1 10th-ounce Platinum Britannia offers a flexible way to get into platinum, which currently boasts a spot price significantly lower than its ordinary ratio with gold, and many consider it to be highly undervalued. Better yet, the 1 10th-ounce Britannia is just $29.99 over melt with a minimum order of 5. All of our specials this week are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We are always privileged to have this well-followed returning guest, Rick Rule, the founder of Rule Investment Media, formerly the CEO of Sprott Asset Management, joins us this Friday, October 20th, 2023. Rick, thanks for coming back on Liberty and Finance.
Always a pleasure, Dunnigan. Thank you for having me back.
As we did last time, we have a list of viewers' questions that have been submitted prior to your arrival here. And with your permission, we'd like to try another rapid fire round, see how many of these we can get through in a jiffy. And some of them will be very familiar to you, but they're all of interest to at least one of our viewers, and I think probably to many. So let's give it a crack. We have Akarshesh 8300 who says, based on what parameters in the stats available, for example, in Yahoo Finance or anywhere else, can we distinguish a well-established junior company among the list of them? If it's not possible to do it this way for people like us who don't have the means to pay for research, what's Rick's suggestion to do so?
I don't know that there are any screens as to longevity or solvency. One thing that you can do to screen is screen for positive working capital. This is a capital-intensive business. The juniors are almost all, by definition, pre-revenue. And the first test of stability is solvency. Screening for free working capital on a tool like Bloomberg or Yahoo is probably the first step. But the second step needs to be done manually. You need to look at least the last 2 years' annual reports and figure out what the company's burn was over 2 years. If a company, as an example, has $5 million in the treasury, and that seems adequate to you, but you find that they've been spending $7 million a year for the last 2 or 3 years, what you come to the conclusion that you come to, pardon me, is that they only have 8 months worth of working capital left, and you need to become concerned. There is no one-size-fits-all rule of thumb, sadly. My self-serving suggestion is, given that the questioner doesn't believe that he or she has the money for paying for research, that they go to the Rule Classroom, ruleclassroom.com, where there are well over 100 hours of instructional video around securities and credit analysis in the mining and oil and gas sector, all of it free.
The second question is even more general, and maybe it has the same answer as the first one, and that is, The Real Rye Bread asks, how do we get started when it comes to natural resource investing?
My suggestion is, again, go to the Rule Classroom and listen to the video on the difference between alpha and beta and decide for yourself what your own investment goals are. I believe now at age 70, having been in the market for 49 or 50 years, that most investors are better starting off buying the largest and the finest natural resource companies in the sector. My own experience is in a natural resource bull market, which we are not in yet, that the biggest companies in the sector can give you doubles or triples. Pretty good return relative to the risk. In addition, because none of us know when that blessed moment, the bull market, is going to come, the dividend streams from the very largest companies reduce the risk that you run with regards to the time value of money. I suggest to people that they invest before they speculate, with the careful note, Dunnigan, that I speculated before I invested. All of the money that I now carefully invest, I made through wild speculation. But since the viewer asked me what he should do as opposed to what I did do, I would suggest start with the video on beta versus alpha and invest and then speculate.
Yeah, I always love it when our show becomes a confessional rather than just a tutorial. Adam Hogan, 81, and this is for folks who don't realize that your interest is much broader than just precious metals and so on. Adam Hogan, 81 says, for exposure to oil and gas, do you use an oil price ETF aiming to track WTI or focus on producers, exploration, royalties, etc.?
I don't use ETFs in industries that I understand well. Having constructed a couple of ETFs myself, I know that they're designed to give you broad exposure to beta. And traditionally, they own several companies, if I understand them, that I wouldn't invest in with a straight face. I suggest that you can get all or 85% of the beta that you would with a broad-ranging oil and gas ETF by buying 5 or 6 stocks yourself, probably de-risking the beta, and certainly saving you the 40 or 50 basis point fee that would accompany the beta. So if one is willing to do almost any work at all, there's no particular need to own an oil and gas ETF, given how many very high quality names there are for the individual investors to buy outside of the ETF wrapper. I do personally buy ETFs to balance my portfolio in sectors I don't understand. As an example, I personally own the Dividend Aristocrat, which is an ETF on very, very, very large U.S. companies that dominate the sectors that they're in and have met or exceeded dividend forecasts every quarter for 30 years. I don't have enough background in various industries to understand companies like Merck or Shearing Plow or Procter & Gamble. And while I know that owning the biggest and finest companies in the United States is something that I want to do in my portfolio for the long term, it isn't worth my while to research those companies. The consequence of that is where I have less knowledge, I do employ an ETF.
The Nikki Videos asks, are there any new mechanisms in the works that trade or set metals pricing and values? The rumor mill is churning. So we've certainly had some discussion for decades about factors that can affect pricing on the COMEX and on the LBMA, et cetera. This is a question, are there any new mechanisms we know of that may be replacing the ones that more people are more familiar with?
The answer to that is absolutely. The market is innovating constantly, and the increasing access that various players have, as an example, to banking, but the increasing access that various players have to each other as well means that the old inefficient mechanisms like the LBMA are being forced to innovate, even as competitors are looking to disrupt them. The second thing that you're seeing is that the old market mechanisms are inefficient mechanisms for new actors that don't have exposure to them. And what is happening increasingly is that there are off-market transactions, often on a negotiated basis. As an example, the difference between the term market in uranium and the spot market in uranium, where bilateral contracts are taking place off-market. And those bilateral contracts are assuming larger and larger importance. As an example of that, the Saudi Arabians have now taken equity interests in 3 independent oil refiners around the world in return for supplying them oil on a contract basis over a 20-year term. These aren't exchanges that are taking place in any commodity market. So there's a proliferation of new technologies and new actors in the commodity business, all of which are looking to displace some or all of the existing participants. The real breakthrough will come when the industry, or enough of the industry to be substantial, begins to affect blockchain-style transactions in commodities, when commodities, probably starting with gold, become tokenized, and the token represents redeemable physical commodities held in various places. My suspicion is that the technology that enables that exists today, but the mechanism for a broad trusted market that's tokenized probably doesn't come about for another 5 years. But I suspect that the future of many commodities will be in standardized, tokenized distribution 5 years or 10 years hence. The other broad disruptor will, of course, be directly negotiated transactions of the type that were popularized in the 60s by the Japanese trading companies that didn't have access to the resources where they'd been frozen out by American or European actors.
Right. And that last one is, well, both of those major trends are likely to emerge even more strongly in the next half decade or so, I would imagine, as well, because we're seeing tokenization of a lot of things, for one thing. And secondly, the BRICS Plus and the SWIFT pressures and the punishment by the U.S. of their political adversaries, et cetera, all are kind of accelerating that second movement that you talked about.
That's a very good point. If you look at the impact of U.S. sanctions on Russia, which would have been probably pretty effective 20 years ago in a period of U.S. hegemony, have proven to be completely ineffective. There are various states that don't have any interest in being told by the U.S. what to do, and the U.S. maintains an interest in telling people what to do, much to the chagrin of the others. The weaponization of the U.S. dollar, which is to say the confiscation of Russia's $300 billion in U.S. Treasury, the imposition of sanctions against Russian products by the United States, while the United States doubled their imports of Russian uranium, and the weaponization of the SWIFT banking system by the United States, even though it's not U.S. property, is something that's really driven the idea around the world of a non-U.S. centric platform for trading commodities, and has reinforced the need for bilateral trade relations between countries that's outside the purview of the U.S. Congress.
We've got, speaking of other asset classes outside of precious metals, although this is one that's under debate as whether it belongs in that realm or not, platinum specifically. Niels Han Dynasty 8882 says, why do Forbes and I disagree with you on platinum and its value and outlook? Maybe we should turn that around as, why do you appear to disagree with Forbes and this questioner about platinum's value and outlook?
I don't know anything about their view on platinum, so it's difficult for me to answer a question. I am a platinum speculator. I believe that platinum is unduly underpriced relative to palladium. Ironically, because platinum used to be more expensive than palladium, and fabrication technologies began to come to the fore that favored palladium over platinum because platinum was more expensive. Companies, industries that can ultimately substitute platinum for palladium, as an example, auto catalysts, are working very actively to do that. For me, the thesis around platinum, though, isn't so much demand as supply. Platinum is produced in large measure in 3 countries: South Africa, a basket case in my opinion; Zimbabwe, worse, although improving a bit, unlike South Africa; and Russia. The current weakness that you're seeing in platinum, I suggest, is mostly a function right now of Russian dishoarding. The Russians, as you might have gathered, have a need for cash right now. And the consequence of that is that all kinds of commodities, from potash to platinum to oil and gas to copper to nickel to diamonds, are being sold quietly but wholesale by the Russians to raise cash for their obvious needs. If the conflict in Ukraine begins to blow over, my suspicion is that when markets normalize, Russian inventories won't be there to service the market. The other reason to own platinum, of course, as a speculator, is that if there is a supply disruption as a consequence, as an example of internal political discord in any of South Africa, Zimbabwe, or Russia, there would be extraordinary falls in platinum production, and likely as a consequence of that, soaring prices. It's worthy to note, and I'm sorry to spend so much time on this answer, but it interests me. It's worthy to note that platinum has a lot of upside simply because in the fabrication technologies for which it is appropriate, the price of platinum is almost irrelevant to the finished price of a product. It costs $125 to produce enough platinum to make a catalytic converter in a Mercedes or some sort of car like that. The idea that if you double the price of platinum, so the price of a catalytic converter, the platinum in a catalytic converter, goes from $125 to $250, it has absolutely no outcome on the price or the cost of the car which is produced. A $50,000 car wouldn't go up very much at all if the price of platinum doubled. If you have a supply shortfall where the price has to go up and the price can go up because of elasticity in price, it will go up.
Speaking of other assets, we have a question here from user NS9BP, so a bunch of letters, says, if the following ratio investment principles I first heard of from Mike Maloney, I don't know how pervasive this strategy is, but what asset class has the most promising outlook in your view? So I guess that's a viewer who is looking at the cost of gold relative to silver or precious metals relative to the Dow or whatever, and looking what asset class might be one to be keeping an eye on in the next decade.
The gentleman asks an unanswerable question because the applicability of an asset class in any portfolio is mostly a function of that portfolio. What is it that the investor is trying to accomplish? Is the investor a speculator? How much risk can the investor handle? What period of time is the investor looking at? I would suggest that the most timely speculation in the natural resource field is certainly uranium, one where the bull market that we have anticipated for 2 years or 3 years is really and truly underway. Having said that, the uranium juniors have all doubled. So it's likely that the easy money has already been made. The easy money has been made when a sector is hated, and uranium is no longer hated. For most investors who are looking for stability in an industry, income, and price escalation over time, I would suspect that the best natural resource industry for most investors, not speculators, but investors, is the oil and gas industry. It's difficult to find a company with better market prospects and better balance sheet, better asset allocation than ExxonMobil. So for many investors, although it's really, really, really boring, and although President Biden and Prime Minister Trudeau and my favorite energy physicist, Greta Thunberg, all those folks don't like it, for most investors, that's probably where you start your natural resource portfolio.
This next one, I guess, blankets most of these discussions we've had about investing or speculating, as long as you're talking about holding stocks in or equities in companies. Kubukonomi 3066 asks, has Rick Rule read The Great Taking? And just for those of our viewers who haven't taken a look at that free book that's available online, it's basically making the case that the legal structures around stock certificates and the ownership of financial assets of that type are the laws around that have been so structured that you don't actually own them unless you hold the certificates, and you can't hold the certificates anymore. So if there's a big upset in the market, you could have everything taken from you, and that means everything. We've certainly talked with our viewers about how nothing in the bank is yours, but here they're saying perhaps nothing in the brokerage account is yours. At any rate, how does that concern affect your approach to investing or speculating? And for people who are wanting to reduce risk, but they're concerned about their exposure to the risk of ownership of their equity assets being taken from them. How does that affect your strategy at all?
It doesn't at all. I've read the book, and strictly speaking, what they say in the book is true. The probability that the government would have to or would in any circumstance stoop to that kind of theft, I think is unlikely, if for no other reason than there are 400 million guns in private circulation in the United States. And even the big thinkers wouldn't want to risk the type of ire that they would face by overtly stealing from the citizenry, particularly when they can covertly steal from the citizenry and become very popular. People for years have asked me if the government was going to steal our IRA. I don't think so. What the government is going to do is increase taxes and fees and is going to subtly tax your wealth away through taxation. When the government spends money it doesn't have and imposes a debt on you and your children, it's extremely popular with the populace, and the government person gets reelected. If that same person proposed to steal from you overtly as opposed to covertly, that person might get shot. Put yourself in the congressman's position. Would you rather be a popular thief, or what? Would you rather be a dead thief? Yes, absolutely. The mechanisms exist for the wholesale plunder of private wealth by the center. But that carries with it extraordinary risk, which is to say, the collapse of civilization. The people who are the masters of civilization have no particular interest in its collapse.
We have a question here, several questions about Battle Bank or related to it. So I'm just going to hit those in a hurry, and then I'm sure that will lead you to be able to tell us more about it. Cheryl AZ says, if it comes down to CBDCs only, can Battle Bank choose not to participate? Please explain.
If it came down to CBDCs only, of course we couldn't. I mean, bankers are fundamentally used money salesmen. And if the only money that exists is the CBDC, likely we would be forced to use it. I don't think, note I said think, I don't think that we're going to get into a world that is so unipolar that the only medium of exchange is a central bank digital currency. I will say, as a sidebar, that since the appearance of the idea of the CBDC, I stopped using credit cards as frequently, and I use cash much more to reinforce to local merchants the idea that there is a market out there for cash that they want to serve. The second thing that I'm doing is I'm increasingly at restaurants tipping in cash, saying to the waiter or waitress, by the way, I designate this payment to you as a gift, not a tip. The IRS would tell you that tips are income and taxable, but gifts up to $17,000, way more than I ever tipped, are non-taxable. And I say to the waiter or waitress, the reporting obligation is up to you, but I'm informing you as the giver that this is a gift, which is non-taxable, rather than a tip, which is taxable. I do this to raise awareness among working people about the odious nature of taxation and also the advantage of cash in many transactions.
Related question, Intrepid Soul 7 asks, please ask Rick when Battle Bank will be open and if we'll be able to ship our precious metals for storage and loans against them.
I believe that we will get preliminary approval by the FDIC this month in October. We're finally in deep engagement with them, and while it isn't pleasant, it's nice to have the process really and truly underway. We're in good shape with the Fed. We're in good shape with the Office of the Comptroller of the Currency. The FDIC is our last hurdle. From the point in time that we get conditional approval, we should be 90 days away from opening. But the fact that that's going to happen over Christmas when not much happens means that we're likely 120, 130 days away from opening. When open, absolutely. We would like to do business with you concerning your precious metals. If you'd like to ship them to us for storage, we will be happy to arrange economic storage for you. If you're happy with your existing storage and brokerage arrangements, we're happy to honor that. If you have an account, as an example, at Miles Franklin with segregated storage, and you want to establish a credit facility, which is to say you want the option to borrow or access liquidity around your precious metals holding, Battle Bank exists to do just exactly that.
One more related question here with Battle Bank. Will Sprott Inc. be devising additional investment strategies to complement its existing ones, possibly investments that interact with Battle Bank?
I need to say that I'm no longer an employee or a director of Sprott. I remain Sprott's largest shareholder. I believe I'm Sprott's second largest private client. So I would describe my relationship with Sprott now as a beneficiary. I would love to design products or relationships between Battle Bank and Sprott that were complementary to both institutions. You can bet that when Battle Bank has a large enough asset base, that we will approach Sprott and attempt to serve as their banker. We would love to bank Sprott. It's a business I know well. I know the people well. I would love to bank Sprott. Whether or not Battle Bank ends up being Sprott's bank is something that Sprott will have to determine, not Rick, sadly.
So for things that Rick can determine, are you willing to re-up at this time your offer to rank portfolios of our viewers and any other related offers you'd like to extend?
Absolutely, positively. Go to ruleinvestmentmedia.com, list your natural resource stocks. I will personally rank them 1 to 10, 1 being best, 10 being worst. And I'll comment on individual issues where my comments might have value. In addition, if you are interested in exploring different banking relationships, if you are unhappy with your current bank, in the question and comment section at Rule Investment Media, simply write bank. Finally, I think there will be a link on this video to the Royalty and Streaming Bootcamp, which will be airing this weekend. Long-term viewers of Dunnigan Kaiser will know that 4 times a year we put on a deep dive around some subject in natural resource investing. We've done uranium, very well timed, by the way. We've done silver. We did electric and battery metals. The upcoming one is royalty and streaming, which I think is the single best investment segment in the natural resources business. This will be an 8.5-hour long production. Online, you will have the ability to view the material for a year after it's been given. It comes with a $99 price tag, which is gold-plated guarantee. If you don't feel that you got your money's worth out of the curriculum, email me. I will absolutely, positively refund your commission. In addition, by signing up through the link that Dunnigan will post below, we will forward some of the subscription revenue to Dunnigan. You'll be able to assist Dunnigan doing the fine work that he does for you all on an ongoing basis.
Well, and I wanted to voice to our viewers as well. Many of our viewers have explained that they didn't necessarily have the logistical flexibility or the funds available to do the across the country or across the world travel to visit like the annual conference for Rule Conference for Symposium for Natural Resource Investing in Boca Raton, Florida. And however, $99 is usually within the reach of most who have an interest in this area. And so it makes it much more accessible. And the flexibility means that people can, in fact, watch these videos when they can squeeze it into their schedule before or after work or whatever on weekends, etc., without having to have travel wrapped around that. So,
Dunnigan, I need to say, as an example, the uranium boot camp, I've been in the uranium business 30 years. And I put on the boot camp. I organized the curriculum. I've still had to play the tapes 4 times after the boot camp because there's so much material that you can't absorb it in 8.5 hours. You just can't. So I look forward to, of course, seeing as many of you as possible at the Royalty and Streaming Bootcamp. And I look forward to the rest of you visiting both ruleinvestmentmedia.com for the rankings and also the Rule Classroom, where I am over the next 2 years putting up 60 half-hour segments on various aspects of natural resource investing, absolutely, positively, for free.
On behalf of all of our viewers, just once again, thanks for joining us and being a good sport about fielding these rapid-fire questions and giving us the full explanation that really fills in a lot of gaps in our knowledge and understanding. A lot of people say that they have to watch our interviews multiple times in order to absorb all that's in them, and I appreciate that myself personally as well. So thanks for joining us on Liberty and Finance.
Well, certainly a pleasure, and congratulations for the wonderful media business that you and your entire family now have created.
Thanks, Rick.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.